up, a look at the state of the IPO market with Joseph Lucosky, founder and managing partner at Lucosky Brookman. This is Bloomberg. But let's break down the broader IPO landscape right now. We're joined by Joseph Lucosky, founder and managing partner of Lucosky Brookman. Joseph, you know, Anthony was talking about the fact that we've seen a lot of fintechs come to market. We really have seen a lot of foreign companies come to market as well. But I imagine we'll be seeing a pretty serious IPO slowdown if this war continues.
Yeah, well, I think the market is segmented into two facets for me. So the top end of the market is still having some energy and some backing from institutional players, especially anything around technology, artificial intelligence. Obviously, everybody is waiting to see what SpaceX does. But that's not the case for the lower end of the market, which is the emerging growth market. In December of 2025, Nasdaq passed some new rules on a discretionary basis to approve these listings, which has really slowed down, at least temporarily, the emerging growth market, which accounts for 100 plus IPOs a year, and really is starting to recalibrate that market at a higher level.
So walk us through that. I mean, what are the new Nasdaq rules? Why did they pass them, and how are they affecting the market?
Right. So every year, the emerging growth market accounts for 100 plus IPOs. Last year in 2025, there were 134 emerging growth IPOs. 101 of them were foreign private issuers, meaning generally came from abroad. Because of extreme volatility in a number of those IPOs last year, which obviously the exchanges and the Securities and Exchange Commission don't like, Nasdaq passed on its own accord new rules that now take into account discretionary factors to approve a company for listing. So they're going to look at things like the quality of your management, the quality of your advisors, where you are located, and really see if you are on a basis worthy to be listed. Even if you meet all of the quantitative and qualitative listing requirements, they're still going to take a discretionary pass at your listing, and that is causing the market to temporarily slow.
All right, Joe, we running into a break, so we're going to have to cut this short, but I hope we can get you back because I know you're overseeing both the transactional and litigation departments at Lucosky Brookman, and it would be fascinating to have a broader conversation on how regulation has changed business during this second Trump administration. So, Joseph Lucosky, thanks so much for joining us. Hope we get you back soon.